while you were staring at your screen, watching silver plunge from $9 an ounce, feeling that knot in your stomach, questioning every buy decision, every stack of physical, every mining share you ever added. Somebody else was quietly, methodically buying. Not retail traders dipping in with a few ounces. Not hedge funds making tactical moves. We're talking massive, coordinated nation, state-level accumulation. The kind that leaves footprints in the data if you know where to look, and those footprints. They tell a story so clear, so powerful, that it'll either fill you with regret for not acting sooner, or make you smile quietly because you're already positioned. Because what I've uncovered in the charts, the premiums, the vaults, the policies this week, it doesn't just hint that silver is going higher. It mathematically, historically, and fundamentally demands it. By the end of this video, you'll see exactly why 300 silver by summer 2026 isn't some wild dream or hopium. It's the logical outcome of a pattern that has repeated twice in modern history. And both times, the handful of people who recognized it early, they didn't just make money. They transformed their entire financial future. Welcome back to the hidden economy. If you're tired of surface, level CNBC takes, and want the real, uncomfortable, data-backed truth that mainstream media avoids like the plague, then hit that subscribe button right now. Turn on notifications. And in the comments, just drop silver to the moon. So I know this message is reaching the right people. Let's get into it. I've been losing sleep over this one thing for weeks now. Silver finally broke and held above 50 per ounce. For the first time in 50 full years. Let that sink in. Half a century. From the Hunt brothers' squeeze in 1980 right up to 2025, silver was imprisoned in a tight range. Roughly $4 on the low end to $50 on the high end. Every single time it sniffed 50 bam. Slammed back down. 1980 rejected hard. 2011. Rejected even harder after touching 49.80. For generations, the narrative was locked in. Silver is a 50 metal. That's its ceiling. Accept it. That's what Wall Street told your parents. That's what they told you. That's what every talking head on financial TV has parroted your whole life. But here's the part they never mention. The inconvenient truth they skip over. In those exact same 50 years, gold didn't obey that rule. Gold didn't stay trapped. Gold blew past its 1980 high of 850. It blew past its 2011 high of FIRS 900. It kept printing new all-time highs decade after decade. Copper, same story. Copper languished between 50 cents and 1.50 for decades, then exploded in 2006 to over 4. Lead did it in 2007. Zinc, nickel, almost every major commodity that spent years compressed in a range. Eventually broke out and repriced dramatically higher. Every single one, except silver. Silver was the outlier. The only major commodity forcibly held below its historical precedent for half a century. Do you realize what that really means? It means an enormous amount of pent-up pressure has been building. 50 years of suppressed demand, suppressed price discovery, suppressed energy. And now that pressure is releasing. When something like this finally breaks free after decades of compression, it doesn't politely rise 20% or 30%. It explodes hundreds of percent. That's not speculation. That's physics applied to markets. That's what the long-term chart is literally screaming at us right now. Let me take you deeper. I went back and dissected every major silver bull run in the modern era. And I found something so eerily consistent that I literally put my coffee down and stared at the screen for a solid minute. Pattern number 1, 1979 into 1980. Silver started around 12 and rocketed to $50 in just 5 months. Quadrupled. Not over 5 years, 5 months. Pattern number 2, 2010 into 2011. Silver from about $18 to nearly $50 in 7 months. More than doubled. Again, explosive gains packed into a handful of months. In both cases, the real money, the life-changing money, was made in a very short window. And here's the key detail. Both runs shared a scary mid-surge correction. A sharp pullback that felt like the end. In 1980, there was a vicious jiggle that shook out weak hands. In 2011, a brutal drop that made people scream. It's over. Everyone who got shaken out missed the final leg. The acceleration where prices went parabolic. That pullback wasn't the top. It was the last gift, the final chance to load up before the rocket took off. Now look at today. Silver began its acceleration in November 2025. That was month 1. December was month 2, steady climb. By late January 2026, we punched above a 90. Then came the crash. A fast, vicious 36-40 an hour collapse that wiped out gains and left holders nauseous. Sound familiar? It should, because this is textbook pattern repetition. Month 1 ignition. Month 2 momentum build. Sharp correction shakeout of weak hands, paper traders, leveraged players. If history is any guide, and it has been precise twice before, the bulk of the move hasn't even started. The explosive phase, where silver goes from current levels to 300 or far beyond, historically unfolds in months 3 through 6. That window lands us squarely in early to mid-summer 2026. But wait, this cycle is different. And this is where it gets truly mind-blowing. In 1980 and 2011, those massive surges still crashed into the 50 ceiling. They were powerful, but confined. They lived and died inside the old Fort 50 reality. This time, silver didn't just approach 50. It shattered it. It went to 9 all, and even after the brutal crash, it refused to fall back below the 50. It held. That means the old ceiling is now the new floor. The old reality is dead. Silver is building its launch platform on top of the grave of the last 50 years. Imagine a dam holding back 50 years of water. Year after year, decade after decade, pressure builds. Every crack gets patched. Every breach attempt gets crushed. But the water never disappears. It accumulates. Now the wall has cracked wide open. Nobody can rebuild it fast enough. When it finally gives way, it doesn't leak slowly. It unleashes a torrent with 50 years of force behind it. That is exactly what we're witnessing in silver right now. The compression is over. The release has begun. Now let's talk about the biggest mistake I'm seeing from even seasoned precious metals analysts. The one that's costing people a fortune. After the 90 crash, I watched prominent voices, people with large followings, announce they sold their entire positions. They showed RSI at 80 fluff, momentum oscillators flashing red, overbought signals everywhere. It's corrected. Time to take profits. Technically, yes, a correction happened. But here's the fatal flaw. They're analyzing this breakout with tools calibrated for the old range. It's like using a household thermometer to measure lava from a volcano. The device wasn't designed for this temperature. In the old $40.50 trap, RSI 80 meant overbought, sell. Momentum peaks aligned with price peaks at 50. But look at the longer charts, the annual momentum, the multi-decade view. Silver has already surpassed the momentum levels that topped out in 2011 and even the 2020 mini surge. The old momentum ceiling is broken, just like the price ceiling. Anyone exiting based on hold reality indicators is about to miss the biggest wealth transfer event of their lifetime. And the psychology is brutal. Once sold, getting back in at 120, 150, and or div 200 feels impossible. Most never do. They'll sit on the sidelines just like they did when copper broke out and kept running. Right now, there are 3 kinds of people watching this. Type 1 sold during the crash, secretly hoping the rally dies so they can say, I was right. Type 2 held through the pain, stomach churning, but still in, looking for any sign they're not insane. Type 3 sat on the sidelines waiting for the perfect dip, and now realizing the perfect entry might have already come and gone. Whichever you are, the data doesn't care about your emotions. It only follows the pattern. And the pattern says, month 2 of a 5 to 7 month surge that has historically delivered triple-digit percentage gains. Next, something mainstream media refuses to touch. The Shanghai silver price versus New York COMEX. Right now there's a 30 per ounce gap. Shanghai is trading 30 higher, not a tiny arbitrage blip. A massive, persistent, widening premium. Pause the video. Google Shanghai Silver Premium right now. See the number with your own eyes. Because when it's not my screen telling you, it hits harder. That gap isn't noise. It's the physical market screaming that the paper price is fiction. Remember my last video? China's export controls effective January 3rd, 2026. Only 44 state-approved companies can export silver. That functionally traps 60-70% of the world's refined silver supply inside China. Result, domestic Shanghai price skyrockets, while Western paper price lags. And it's not just China. Bullion dealers across North America are quietly warning clients. One may only pay 10 to 15 below spot when you sell physical to us. They can't source enough real metal at current quoted prices. That's not normal. That's dislocation. And history is crystal clear. When physical premiums diverge this far, the paper price doesn't drag physical down. Physical pulls paper up. Every single time. Never the reverse. Silver moves on two massive waves crashing together right now. Wave 1, industrial demand. Silver is irreplaceable in solar panels. China makes 80-90% of the world's supply. In AI data centers, 5G EVs, medical imaging. Global silver deficit. 5 straight years since 2021, demand outstrips supply every year, and industrial silver doesn't come back. Once embedded in a panel or chip, it's gone forever. Recycling economics don't work at those tiny quantities. Wave 2, monetary demand. Silver has been money for 3,000 years, not 300, 3,000. And on April 1st, 2026, India's Reserve Bank officially allows silver as bank collateral for the first time in modern history. 1.4 billion people suddenly have access to silver as a recognized monetary asset. When silver flips from industrial input to store of value for a population that size, demand doesn't rise linearly. It goes vertical. Gold has ridden the monetary wave for years. That's why gold keeps hitting records. Silver is gold's undervalued sibling. The gold-silver ratio is still at extreme historical levels. Every time it's stretched this far, silver catches up violently. Not gradually, violently. Two unstoppable demand waves. Supply locked in China, vaults draining globally. This isn't a 20% rally setup, this is regime change. Zoom out to the macro picture. Because silver doesn't trade in isolation. The US dollar index has broken a decade-long structural support. Not bending, broken. Slow decay ahead. M2 money supply, every decade, the Fed increases at 80-90%. That's official data. Each dollar loses purchasing power cumulatively. Precious metals are the exact inverse. They reprice upward to reflect that erosion. Bonds are cracking. U.S. Treasury futures hovering near lows that threaten the post-2022 stability zone. If they break another few points, we enter Japan, style bond crisis territory. UK already stressed. Global sovereign debt at nosebleed levels. Jamie Dimon warned, you can't keep kicking this can. When everyday people lose faith in government bonds as safe. It's a financial nuclear event. Where does capital flee? For 3,000 years, gold and silver. Commodities breaking out. Bloomberg Commodity Index above long-term resistance. Crude triggering a move that could take it to 90 flaws. Wheat joining. Higher input costs, inflation expectations, flight to monetary metals. Stocks. S&P banging its head at 7,000 for months. Sideways. Gold and silver outperforming dramatically. Quiet rotation from paper to hard assets is underway. All converging, dollar down, bonds cracking, commodities up, stocks flat, a 30 physical premiums, 5-year deficit, India monetizing, China hoarding, vaults emptying. I've followed markets for years. This many aligned signals on one asset is unprecedented. The anchor number gold's 2015 cycle low Lu 1 Geo 50. Pace bull markets 8x from low to peak. Projects no 8 400 8 500. JP Morgan's exact published target 8 500. Independent confirmation. If gold hits that and gold-silver ratio normalizes even halfway, silver lands at 300 midpoint. 500 is upper end. Explosive phase. 5 through 7 months from breakout. We're in month 2. Risks exist. Silver volatile. Leverage can destroy. Miners swing wildly. Pattern could break on aggressive Fed hikes. Deflation shock. China policy U-turn. Unlikely per current data, but possible. Not advice, just pattern plus data. Picture the next week's February frustrating chop. Bounces, dips, arm, wrestle. Structure rebuilds underneath. Reclaim 85 to 88. Bears panic. March, retest highs. No overhead supply left. Weak hands gone. Acceleration March, June. 1979 quadrupled there. 2011 2.5x there. This launch starts from highest base ever. Above the 50-year ceiling. With macros screaming higher. 5 years from now, you'll remember the 90 crash. The doubt. The nausea. Headlines yelling, bubble over. You'll either recall panicking out, or seeing the pattern, trusting the data, and making the call that changed your life. Silver was caged for 50 years. Told it couldn't break 50. It broke. It held. The new floor is the old ceiling. The dam is cracked. The torrent is coming. This is what the data shows. Not a dream. Not hype. Reality unfolding. Your move. If this hit home, like, subscribe, comment, silver to the moon. Next video, vaults approaching zero. What happens when paper meets empty shelves? Stay tuned. Clock's ticking.